Assalamualaikum warahmatullahi wabarakatuh and a very good day I bid to Dr. Irfan Najiha binti Basir Malan. My name is Nurul Farhanah binti Mazli and my matrix number is 2022758617. I am from Office System Management Honours BA 2322 C student. I will be presenting about financial ratios analysis of these two companies, Kokwalin Holdings Berhad and Saudi Group Berhad. First thing first, let us get to know what financial ratio analysis is, what is meant by trend analysis, and what is cross-sectional analysis. Financial ratio analysis is the process of assessing the performance and sustainability of firms, projects, budgets, and other financial operations. This analysis usually includes looking at future profitability to contribute to the redistribution of income to or from a company. Aside from that, trend analysis is an analysis of the trend to the company by comparing its financial statements to analyze the trend of the market or analysis of the future based on past performance result. Meanwhile, cross-sectional analysis provides a clear view of the position of two companies at a specific time of year. It may focus on a single company for head-to-head analysis with its biggest competitors, or it may approach it from an industry-wide lens to identify companies with a particular strength. Now, let's go on introduction of these two companies that have been chosen for the financial ratio analysis. The first company is Kokwalin Holdings Berhad. Kokwalin Holdings is a Malaysian food and beverage company that specializes in the production and distribution of sweets, beverage, and other related goods. It is currently engaged in the manufacturing and trade of all types of processed and preserved foods and fruits and was listed on the second board of Bursa Malaysia Security Berhad on 18 January 2005. Kokwalin Industri Berhad is a primary manufacturing arm of the group that was founded on 22 August 1990 and starting its operation on 2 March 1991. And for today, Kokwalin Holdings Berhad had developed on 5 subsidiaries around the world, which is leading manufacturer of sugar confectionery products in Malaysia, including fruit gummies, candies, chocolate, wafers, and snacks. The second company that I choose is Saudi Group Berhad. Saudi Group Berhad is an investment holding company which manufactures, distributes, and markets fresh and frozen foods, processed chicken, beef products, and baked products. This company was established in 1985 as subsidiaries and was in Kedah Industrial District Factory. Saudi Group also been known as the one of Malaysia's largest and most progressive processed frozen food with manufacturers with a total of 500 workers. This company aims to manufacture innovative products to outperform the competition and become one of the most widely produced OEM items, as well as one of the most innovative in the market. Besides, the primary objective of Saudi Group was to improve many aspects of their business soon, including establish a world-class supply chain and advancement of skills for its employees.
Trend analysis.
This is a trend analysis, and for the first ratio I will talk is liquidity ratio. In this ratio, I choose two types of ratios, including current ratio and quick ratio. For the current ratio, we can compare based on this table regarding on Kokwalin and Saudi Group in the year 2019 until 2021. For Kokwalin, it started in 2019 with 4.95 times, while Saudi Group with 1.5 times. In 2020, Kokwalin gets 6.44 times and Saudi Group with 1.02 times, and at the end of year 2021, Kokwalin got 5.2 times, meanwhile Saudi Group got 7.2 times. Both of these companies had a current ratio more than 1, which means they are doing good in running their business financial account and can meet their short-term obligations. As for the second analysis, which is quick ratio, in 2019 of Kokwalin, it gets 3.09 times and has been increased in 2020 with 3.56 times and declined back in 2021 with 2.92 times. Meanwhile, for Saudi Group, in 2019 to 2020, the company gained 0.24 and 0.36 times for both years, but then increasing in 2021, whereby they get 5.5 times. Saudi Group get the ratio for 2019 to 2020 is less than 1, making it difficulties in cannot run their business properly. For the second trend analysis is activity ratio. For this activity ratio, I choose inventory turnover and average collection period. Inventory turnover, as we can see, they have been decreased rate from 2019 until 2021 for Coqualand. For the Saudi group in 2019, it gets 2.19 times, and for 2020, it increased to 8.57 times and decreased back in 2021 with 6.24 times. As we can see, Saudi group make a good inventory turnover in 2020, whereas the higher the ratio, the better company's productivity. Next, Coqualand's average collecting periods reduced from 99 days to 67 days from 2019 to 2020 and increased back in 2021 with 72 days, compared to Saudi group that has been decreased in average collecting period from 2020 until 2021, dropping from 76 days to 63 days. This is indicating that Saudi group earn more profit quickly rather than Coqualand. Moving to the third trend analysis, which is leverage ratio, I choose debt ratio and debt to equity ratio for calculating debt for these two companies. For Coqualand, the debt ratio dropping from 2019 with the highest debt ratio 15.25% to 2020 with 10.47% before increasing in 2021 with rate 12.84%. As for Saudi group, the company's debt ratio has been expanding from 2019 until 2020 with 61.54% as the highest ratio among these 3 years. Meanwhile, in 2021, the company's debt ratio decreased to the excellent rate with 11.52%, assumes that Saudi group making their business more stable and capability of lasting longer. Debt to equity ratio for Coqualand has been improved, whereby there is decreasing from 2019 to 2020 from 18% to 11.69%, making the company more stable, even have increased a little bit in 2021 with 14.73%. Meanwhile, for Saudi group debt to equity ratio, in 2019 the rate is 77.4% and seems to be increased more to 81% in 2020, then decreased back in 2021 with 56%, which is the best rate to beneficial for company from making a lot of debt. So, the last trend analysis in this company I make is profitability ratio. In this ratio, I choose to calculate gross profit margin and the net profit margin within this both of two companies. For the Coqualand Holdings, the gross margin in 2019 is 28.97%, and for the year 2020 and 2021, its ratio are with 25.03% and increased a little to 25.95%. Moving to the Saudi group, the gross profit margin in 2019 with 9.2% was increased to 16% in 2020 and decreased back in 2021 with 11.6%. This shows that both of the companies must improve their performances to successfully manage their business. The company's net profit margin of Coqualand was dropped from 2019 with 14.06% to 2020 with 9.44%, and then improved back in 2021 with 10.4%. It is not good, whereby in 2020 this company may face in losing money. Besides, for Saudi group, the company's net profit in 2019 is extremely low, only at 0.58%, where company must invest a significant amount of its income to keep its overall operation running. In 2020, the company achieved its greatest net profit margin of 38.9%, while the year 2021 indicates a 5.41% reduction from 2020. It shows that company is overspending on overhead costs that do not directly contribute to product quality.
Cross-sectional analysis.
The current ratio between Coqualand Holdings Berhad and Saudi Group Berhad is distinct in 2021, with Saudi Group having a higher ratio than Coqualand. However, both companies have successfully done as their ratios are greater than 1. It signifies that both companies can pay off most of their present liabilities with their current assets. Despite having a higher ratio, these companies have achieved ratios greater than 2. In terms of current ratio, the longer the times, the more liquidity a company is. Unfortunately, if the current ratio is too high, more than 2, the company will not be able to conduct a strong business utilizing current asset. This will evolve to and become an indicator of business financial advisory difficulties. Coquelin Holdings appears to have a lower quick ratio than Saudi Group Berhad with 2.9 times. A low quick ratio in business might put the company at danger since this company does not have enough current assets to meet the short-term debt except for the inventories. This also shows that the company's short-term viability based mostly on effective stock turnover. Furthermore, Coquelin is in a fortunate situation since the ratios are still more than 1. When a company's ratio falls lower than 1, it means the business might not have enough money to finance its current obligations. As a result, both companies could keep operating their business with short-term current assets while remaining secure. Based on the graph shows, this graph illustrates that Coquelin has incurred a bigger loss in inventory turnover than Saudi Group. On a company's balance sheet, it is categorized as a current asset, and low turnover can result in a negative sales and profitability. This could be due to a lack of marketing with the products becoming able to be sold. Saudi Group does have the greatest inventory turnover rate at 6.3%. The higher the rate turnover, the better for the company, since it assumes that Coquelin may create a sale to sell their goods and items in high demand due to the lower inventory turnover rate. Saudi Group has a shorter average collection period than Coquelin. It means that Saudi Group Berhad rather than Coquelin Holdings is better at collecting payments and selling goods. It also demonstrates that Saudi Group takes only 63 days. In relation to Coquelin, this company's average collection duration must be 72 days. It is apparent that any business with a long collecting period will get a negative impact on its short-term debt paying ability in this perspective of experts. As a result, Coquelin techniques for communicating with clients concerning debt repayment must be improved. If this occurs once more in the future, I think the company may confront a massive issue. In this comparison, Saudi Group has a lower debt ratio of 11.5% than Coquelin Holding, which has a debt ratio of 12.8%. This is a favorable rate for Saudi Group, whereas a lower debt ratio signifies that the company is solid and has a good chance of survive, since a company with a lower debt ratio has much less debt burden. In opposite to Coquelin's, this viability could be jeopardized whether its creditors suddenly demand repayment of their debts. As a result, this is a poor financial framework since the borrower fears not being capable of paying the interest or repay the debt. However, this is still acceptable when all businesses do not surpass or reach 50% of their debt ratio, which indicates that a majority of their assets financed through debt instead of equity. Besides, the debt-to-equity ratio of Saudi Group is substantially higher than Coquelin Holdings, as shown in the graph above. It is obvious that Saudi Group is taking on additional risk by drawing capital from the business to fund operations for advancement. On the other hand, Coquelin Holdings has an edge over Saudi Group with 14.7% ratio. Hence, this company has a lower debt-to-equity ratio that uses less debt from lenders and more equity from shareholders. Coquelin Holdings Berhad has a greater gross profit margin than Saudi Group. It has done a fantastic job of managing the quality of sales performance for their products. It also shows that Coquelin Holdings has much more fund reserves to manage business, finance, and other expenditures. Besides, Saudi Group has a lower gross profit margin. This is a hint that Saudi Group needs to address their strategic and tactical productivity to maximize profit. Therefore, when these two companies are evaluated, it is noticeable that Coquelin Holdings Berhad has a higher gross profit margin rather than Saudi Group Berhad. For the last of this analysis, we can see Saudi Group's net profit margin is significantly smaller than Coquelin Holdings Berhad. The lower net profit margin of Saudi Group suggests that it may have an unproductive cost structure using a weak pricing policy. As a result, this is a source of concern since large gross profit margin is required in business to achieve operating and net profitability. Furthermore, Coquelin Holdings Berhad has a larger net profit margin, which implies it can efficiently control their operations and offer services or goods to customers at a premium costs than their expenses. Therefore, a higher net profit margin shows that Kwakwalan Holding is more efficient at converting sales into profit rather than Saudi Group Berhad.
Recommendations.
For Kwakwalan Holdings Berhad, I suggest that this company may well be able to boost their working capital so that cash reserves are sufficient to cover current liabilities by restructuring their outstanding loans, since they have a lower liquidity ratio performance rather than Saudi Group Berhad. Besides, a business with a large amount of debt must repay their commitments on an accurate and frequently basis. As for Saudi Group Berhad, I can see that this company may have difficulties in their debt to equity ratio, whereby the percentage rate is far too high and could cause significant harm. So, the way this company can do is to use efficient inventory control to diminish the value of its leverage ratio. This can be accomplished by keeping adequate inventory levels and essential for Saudi Group Berhad to prevent accidental and excessively high stock levels that surpass what is needed based on client needs, as well as to avoid cash flow inefficiency.
Conclusion.
So, in conclusion, financial ratio analysis was among the most widely used decision-making methods in a business. It used the data acquired from the ratio calculations to form opinions on how to improve a company's profitability, solvency, and liquidity. Moreover, financial ratios are indeed valuable tools for assessing crucial parts of a company's performance, both internally and externally. This was a significant financial approach in organization that can assist in a better analysis of accounting outcomes and data series, as well as give critical indicators of a company's success. That's all from me. Thank you and have a nice day.